I think one of the things that has happened is during risk-off periods, we see a rush back into indexes. So a lot of the market's gone passive, but when we move into risk-off, this idea of career risk, business risk surfaces in discussions, and there's a movement back into benchmark stocks. We don't own the big benchmark stocks. Only one of our stocks has made it into the benchmarks, and that's Tesla. And believe it or not, Tesla's held up better than our portfolios, right? So I think there's been a lot of algorithmic trading. I felt it pre-COVID, the variables algorithms focused on cash burn, cash cushion.
And yet at the time we were saying, wait a minute, this makes no sense. This is COVID-19 and we need to solve this problem. Innovation solves problems. And so that was one of the reasons we had that switch. Right, we were solving problems, global digitalization, figuring out how we sequence the coronavirus and so forth. I think the same thing now. We've had this incredible decline. We have so many more problems now. Supply chain, Russia's invasion of Ukraine, innovation solves problems. And yet these algorithms and very short-term time horizons are just 5 years. The market and risk goes off to 1 quarter. You know, algorithms are dominating the market. You know, it's very interesting. Most people don't know what our companies do, and they don't know the kinds of problems they are solving. Cathie Wood's Innovation ETF has been through a volatile period recently. Launched in 2015, the investment product aims to track the progress of innovative companies that seek to solve some of the most pressing issues of our time. However, progress on this scale requires patience, something which Wall Street and the City of London, 2 of the world's largest financial hubs, do not have. The ETF share price at inception was around $20 American. It stayed around that level for about 2 years. In late 2017, the price began to pick up, and during the 2020 pandemic, it reached its peak, above $150, just to fall back to about $37 in late October 2022. As Cathie would explain, this product is focused on innovation, which requires investors to focus on the long term, rather than on the here and now. However, greed prevents most institutional investors, or even smaller investors, to take a multi-year view. Everyone wants to make a quick buck, to get rich overnight. But this is not how progress works. There are many failures along the way until something better comes to light and provides a lasting solution to the issue in question. Our world today faces many challenges, from climate change, which requires novel forms of energy, to cybersecurity, wealth inequality, geopolitical tensions, and the threats of powerful AIs that can provide governments with unmitigated power. Solving some of these problems requires new ways of looking at the world and of using its resources. This process is called innovation, and innovation is the power that fuels the new economic world order. However, to spot innovation, back it up and ride it out, a different mindset is needed.
We are not an asset allocator. We are focused exclusively on disruptive innovation, transformative innovation, and I think we're fulfilling an unmet need out there. We are doing research and giving it away to help educate people on how our world is going to transform.
Asset allocators of today focus on the short term, whereas the economy of tomorrow requires long-term thinking. Greed, or the drive to have more stuff quicker, blinds many investors from actually behaving like investors. Instead, they act like speculators. Short-termism is a term that describes this behavior. The CFA Institute defines short-termism as an excessive focus on short-term results at the expense of long-term interests. Short-term performance pressure on investors can result in an excessive focus on their parts on quarterly earnings, with less attention paid to strategy, fundamentals, and long-term value creation. Corporations too often respond to these pressures by reducing their expenditures on research and development and/or foregoing investment opportunities with positive long-term potential. These decisions can weigh against companies' development of sustainable products or investment in measures that deliver operational efficiencies, develop their human capital, or effectively manage the social and environmental risks to their business. However, short-termism is just another term for greed. In 2015, the British newspaper The Guardian made the connection between the two in an article entitled "Quarterly Capitalism is Short-Term, Myopic, Greedy, and Dysfunctional." How do we measure this excessive focus on the short term at the expense of long-term benefits? One way is to look at how much trading relative to economic output, or GDP, is happening over a certain time period. Data from the World Bank shows that as of 2019, the volume of stocks traded relative to world's GDP was almost 84%. In other words, the so-called investors have bought and sold shares worth about 84% of the total economic output of the world, which is an insane amount of money not staying in the same place to work hard for the long term. In the new economic order, this behavior will increasingly be viewed with suspicion and perhaps banned. The world is moving to a more sustainable model. For example, notions such as the circular economy have gained traction. Say what you wish about the World Economic Forum, but the ideas generated at Davos do have a huge impact on our economy and financial markets. The circular economy, controversial as it may be, it is one of these ideas, a herald of things to come. The future does not belong to the greedy. Looking closer at ARK Investments ETF, here are some companies that are bought by Cathie Wood's investment product: Zoom Video Communications, Tesla, UiPath, Roku, CRISPR Therapeutics, and Exact Sciences Corporation. Zoom is the video communications platform we all know and use. It plays in the secular trend of digitalization of our global economy. Its innovative angle lies in changing how we communicate and conduct business across countries. Tesla is a data company. Yes, a data company. It is known for its autonomous cars and battery technology. But in reality, Tesla's innovation moat is its artificial intelligence system, which is probably one of the most powerful in the world. Tesla solves a number of issues, from tackling climate change to developing powerful AI for the future economic model. CRISPR Therapeutics and Exact Sciences Corporation are healthcare businesses operating at the edge of science, aiming to develop new therapeutics and technologies to deal with a wide range of illnesses. However, all these companies required years of patient capital to develop, grow, and adapt. But in a world obsessed with short-term profits, this seems to be lost on investors. For those who are patient and willing to back innovation, the new economic order will reward them tremendously.
What excites us most is the convergence between and among technologies. That means that S-curves are going to be feeding S-curves, and we're going to see some explosive growth opportunities. You asked the question earlier about recession. Toward the end of a bear market and during recessions, our growth is far superior to that of the broad-based indices in terms of revenues and so forth. But some of the convergences, so genomics, so we have the intersection of DNA sequencing, RNA, protein sequencing, plus artificial intelligence, plus CRISPR. We're going to be curing disease. It's already happening: sickle cell disease, beta thalassemia, ATTR, and there are now attempts at diabetes as well, CRISPR Therapeutics. Another thing is autonomous mobility. Zero in revenue today. We believe that will scale to 9 to 10 trillion in revenue by 2030. And that's the convergence of robotics. Autonomous vehicles are robots. Energy storage, they will be electric, and artificial intelligence. And in AI in particular, AI is the glue that's causing all of these convergences. Just in the last few weeks, we're seeing text to image and text to 3D. We've got Meta and Google, kind of putting papers out there and open sourcing this world. And the advancements are unbelievable, so that we're going to lower the barriers to entry in the whole gaming world. User-generated content is going to do that as well. But our lives are going to change completely. NFTs, even with blockchain, AI, NFTs, the creator community, our world is going to change in a way much more quickly than I think people now understand.
It does not make sense that investors remain stuck in thinking in terms of the old economy. A new world order is upon us. Adapt or die has always been the game, especially in finance. This time is no different. Let us know in the comments section below what you think the future will bring in terms of opportunities and, of course, risks. As always, thank you for watching, and don't forget to hit the like and subscribe buttons for more content like this.